Good day everybody, to Guy here, the unknown, and today I want us to look at some beautiful executions that happened, okay? Guys, as I always say, if you're coming to your charts and you don't know exactly what you're looking for at one time, you are simply gambling. You need to know before you even open your charts, you need to know what you are looking for. You need to know where your entries and your stops are gonna be. And that is highly important. Okay, so guys, without any further ado, I want us to look at this strategy. It's a simple strategy that I love and use every day. It's called the most explosive trading strategy for indices, and as the name says, it's explosive. We want to be in moves that are exploding. We want to be in moves that are exploding, and that is highly important. Okay, we don't want to be in moves that are gonna spend the entire day. No, we want to be in moves that immediately explode. Okay, immediately explode, and that goes in both ways. If you are wrong, they're gonna hit your stops. Okay, however, this strategy has a high win rate, and with a good risk reward, it puts you way too far. Okay, so guys, these are the easy steps we follow. The first step is actually to identify trap volume before the session. And B, some days you won't be able to identify trap volume before the session, so you can continue even if you haven't been able to identify those who are trapped. However, from here all the way up to here, you do not go to the next step unless the previous one is met. Okay, so that is to say, you can't come to this step unless this one is met. This is the only step you can proceed without. Okay, so guys, trap volume before the session. We are coming to our session at 9:30 a.m. US time. If you're in South Africa, it's 15:30 p.m. Okay, that's when the New York session opens. It's changing this month to 16:30. Okay, due to US daylight saving times. You can just do a Google search to understand what I mean by that. Okay, so I'm gonna be using a simple example which is on page 33 of the playbook. Okay, so look at this. I drew everything here for you. Step 1, trapped volume before the session. This is very important. Step 1 is to identify those who are trapped before the session. Okay, and step 2 is to do what? Step 2 is to wait for the session opening. Okay, session opening, and that is to say, you are coming to your charts around here just before the New York session starts, and this box here represents the New York session, which if you're in South Africa, it's gonna start at 15:30 p.m. right? 15:30 p.m. Okay, that's the time you are starting, but you are coming 10 to 5 minutes before the session opens, and that's when you want to identify those who are trapped before the session. And when I say who is trapped, I mean who is at a loss when the session is actually opening. As you can see, this is the closing price of the previous day. If you go to your charts, you will realize that this is the indicator. As you can see, prior day open closing line, it's just the closing price. That's where yesterday closed. Okay, and it's a free indicator. It's in the description. Okay, that's why I put it here. Okay, this is the previous day's closing price, and most of the day they're gonna trap above or below here. In other words, they are gonna send people up, or they send people down. And when the session is opening, who is at a loss? Obviously, as you can see, prices were sending people up, they came down, they sent people up. So obviously everybody here, or everybody who went above the closing price of yesterday, is actually trapped because they are at a loss. In other words, everybody who bought here is at a loss when prices are opening here, right? I believe you all understand what I mean by saying trap volume before the session. Okay, and this is very important to know. I will tell you why. Okay, and now we go to the next step. The next step is not rocket science. The next step is actually, you just look at your time. You are not taking the first candle. You're waiting for 15:30 if you're in South Africa. If you're in US, you're waiting for 9:30 a.m. Okay, because that's when the New York session opens, and you are not going to take the first one because it's going to be aggressively big. That's when most of the orders are coming in. That's when the entire stock market opens, so you don't want to be on the first candle. Okay, because mostly it's going to be a stop hunt anyway. Okay, so now if there are news like today, you wait for the news to actually play out. Okay, and now the third step is the most important one. We want to see who is trapped during the session. In other words, even on the playbooks on the same page, which is 33, I have this here. Okay, I have this criteria here: identify trap volume, wait for the equity opening time, trap volume now during the session. Okay, why? Because we don't know what the insiders are gonna do. Okay, aka market makers. So we want to wait for them to do what they are going to do, and then they will give us their hand. They will tell us what they are busy with. Yes, because when they are trapping, actually, say for instance, if they are giving a triangle, when they are trapping, you won't even know that you are inside of a triangle. You won't even see. Okay, in other words, let me show you this. If they are doing something like this, they go up, they come down, you don't know what's happening. You don't have an edge, and you can't keep chasing prices. Okay, so what you can do is just to wait. As they come again up, you will see that at some point there's a level that they are touching repeatedly. Okay, let's say prices can come from any direction, and you just wait and see what happens. If they keep repeating the same price over and over again, now you know you are inside a pattern. Okay, so your job is to wait until you know or understand what's happening. Okay, that's highly important. And then, okay, this is what tells us that they are trapping. When they are doing this, they are going to be sneaky. You're not going to know, you're not going to see, and this is something you don't want to be caught in by surprise. Okay, so once you are able to identify a chart pattern, it doesn't matter what kind of chart pattern. I gave you a lot of chart patterns actually in this playbook. Okay, so look at this, guys. Look at this. Now you know you are in a pattern. Your job is to wait. What I do is I set alerts up, I set alerts down. Okay, because on MT4, it doesn't matter on whatever platform you're using, you should be able to set alerts. So I set alerts up and I set alerts down. Okay, I can set roughly like 3 because I don't want to miss. Okay, so we are going to the next step where we need an evidence candle. And if you see here, I said an evidence candle at the correct time, right? Yes, we need it at the correct time. That is to say, now we need a big breakout candle. At this point, we must be objective. We don't know which direction they're gonna break in. Okay, so we just want to wait. Okay, they can do something like this and choose to break down. As they are breaking down, the alerts are gonna ring for me, and that's when I'm gonna start paying close attention to this. So when you see a chart pattern, because you don't want to be trapped inside, just set alerts. Alerts will save you a lot of stress. Okay, and when they are triggered, that's when you're gonna start looking, because by that, it's a 1 minute time frame, by the way. So the moment it breaks out, you're gonna have roughly 30 seconds to make a decision. Okay, so this must be the biggest candle that breaks out from the last push. Okay, in this case, this is the last push. Had they came to the line, the last push was going to be on the line. In other words, this must be the big candle that breaks out. Okay, you need it to be a big candle that breaks out, and it must close as a big candle that broke out. Okay, so this is why I showed you. The second step is to wait for the session, and then you won't even know what's happening until a pattern is visible. In this case here, I gave you a head and shoulder. Okay, so in other words, now they built a head and shoulder, as you can see. Let me zoom this out. This is where the session opened, and now they went up. You don't have an urge. And by the way, you know that everybody above this closing price is trapped. Okay, so even if they are giving you an opportunity into trap volume, you want to be sure you have enough space. If you are targeting 50 points, you need to know that you have enough for 50 points before these guys can be released. Why? Because sometimes they use the entire day to trap these guys. In other words, they are gathering volume. Okay, because this is simply retail versus insiders. Insiders, I mean market makers. Okay, so if market makers are selling, who is buying? Market makers. So in this case, if market makers are buying, who's selling? Obviously retail guys. So let's say in this case, who was selling? Market makers were selling. Who was buying? Retail guys were buying, right? So they have a lot of orders here. That's why they move to the next level. They still collect orders. Okay, and once they've collected these orders, most of the day they are not going to be willing to let these orders go. Okay, so that's why they are going to lead you again into trap volume, mostly if they still want more. Remember, they are holding a lot of orders here. Okay, so they might lead you back up so that you do what? When they go up, you are doing what? You are buying. And as you are buying, they are selling to you. They are offloading. And when they have enough, that's when they are going to go into their intended direction. Because at the end of the day, the market makers are the ones who are going to win. Why? Because they are the ones who move prices. Okay. At this point, I believe you know that 95% of retail guys are losing. So who is winning 95%? It's insiders. Insiders, market makers do not lose. I'm not talking about hedge funds. I'm talking about the real market makers, because you know that intraday trading is actually ruled or moved by market makers, right? So they might lead you into trap volume just enough to trap you. Let's say you buy. In this case, you are trapped. Everybody from here is trapped. People who follow this move is trapped, and you who follow this move, you are also trapped. Okay, so they are just gonna punish all of you. Okay, so you must be aware that if you want to take a long into trade volume, you need enough. If you are targeting 50 pips, that is to say you need at least enough space to get your 50 before they can release these guys, because sometimes they are going to lead you into it and then reverse, or else they can lead you into trade volume and just come and stop hunt. That's if they can see that there's a lot of stops here. Okay, that exceeds the orders they were planning on the day. They can just come and stop hunt, and of course some days they will come and break and go all the way up. I hope you understand what I'm saying. Okay, I hope I'm not going so fast. Okay, so you just come to page 33, guys, and master this, because this is what happens most of the days. Make sure you understand you and you are able to draw this and to explain it to yourself, because that's is what's going to keep happening over and over and over and over again. Okay, this is like the entire day's template. Okay, this is what's going to keep happening over and over and over again. Okay, so that's why I say you must identify trade volume before the session, so that if they are giving you a pattern and they're giving you an opportunity back into trade volume, you must be aware that you might actually end up being trapped yourself. Okay, so now let's go to the next step, of which we were at by this time, which is a pattern. Okay, now they are giving a pattern. In this case they gave a head and shoulder. Okay, you know this is a common pattern as well, and we need a big candle that breaks out. So this candle here must be the biggest candle from all the candles from this last touch here. Okay, because this is a last touch. Okay, so this is the breakout candle. It must be the biggest candle to qualify to be the evidence candle. In other words, why do we need this to be a big candle? It's simply because everybody who went up is trapped, and the moment prices close here, these people here are at big losses. If you have ever been in the wrong, let's say maybe you didn't use stop losses, or let's say for instance you entered into a position, you over leveraged, or you used a big lot size, immediately if they go maybe 20 pips against you, you can see that you are in a big loss, and it's hard to close such losses. You are in hope that they'll come back to break even where you can exit. You know you are wrong, but closing it is very hard, because you know you are like losing huge amounts because of maybe being careless, going in so heavy, expecting to make more. So they know that most people don't use stop losses first, and secondly, most people will be at big losses at this point, and they will be relying on hope, which is why I say if you are in a position and you are now relying on hope, you don't have stops losses, it's better to close it, because hope is not going to gain you anything. They know and they punish hope. Okay, that's why we need a big candle, because immediately when this candle closes, people are at big losses. Okay, so they can't close. They are expecting prices to come back to break even, so that they can do what? They can exit. Okay, and that's never gonna happen. So if you bought here and prices are here, you are at big losses, relying on hope. They're gonna punish you. Okay, so when this candle closes, this is our evidence candle. It must close at the correct time. Okay, here as you can see, I want evidence candle that are as close as possible to the o'clock mark. This is just a watch, or to the half hour mark, which is half past. So for that reason, I'm only willing to take evidence candles that actually close or happen at 50, because this is a 1 minute time frame. That evidence candle must open at 50 to 10 past. If it opens maybe at 40 something, I'm not taking it. If it opens at roughly 11 past all the way to 20 past, I'm not taking it. Okay, however, if it happens between 55 and 5 past, I love it. I call it the golden times, because this is as close as possible to here. Okay, so in other words, you just look at your watch, guys. Okay, and again, I'm willing to take it as close as the half hour mark, which is half past. So I'm willing to take it from 20 past to 22, but if it happens between 25 to 35, this is the golden times. Okay, so this is important. The evidence candle, which is this large candle that closes here. Today I'm using this page because I want you guys to start mastering this one. All the information you need, you have already. Okay, you have this information, guys. Just make sure you master it. Okay, it's on page 33. Okay, this is the daily template, and this is a perfect template that happens over and over and over again. So when this candle closes at the right time, you enter. Maximum stops already, we have talked about that. Maximum stops are okay, this is the minimum target. However, the maximum stops is something we have already talked about, which is roughly 25. Okay, minimum is 15, but just keep them at 25. It's the safest. Okay, okay, and minimum is 25, because I've explained already that if you are risking 25 to make 50, this is roughly a risk reward of 1:2, and this is the lowest we are willing to go. We are not going to take 1:1, okay? We are not going to take 1:1. We will take at least 1:2, okay? As you can see here, I said market conditions will tell you the minimum is 50, but the rest will come from market conditions, okay? Because sometimes you'll be able to take 1:6, 1:8, 1:10. As yesterday I showed you how I took 1:6, okay? 1:6. So you can do that based on market condition, but the minimum we are willing to go is actually 50, so that we can have at least a risk reward of 1:2, okay? So guys, as you can see here, I also said what type of trend are you in. I also added this one here. It's nothing new, guys. It's something that is already in the playbook, okay? This happens a lot, but not always, okay? That's why I've talked about this a lot of times, and I believe you understand. Like yesterday we were in a trend. You don't want to counter trend something called an explosive trend, okay? You don't want to counter trend an explosive trend. So it is important to know different kind of trends, okay? And I gave you all the different kind of trends, and I also made a lot of videos about different kind of trends, okay? But on this playbook I just summarized everything, okay? It should be easy to find, because I realized that sometimes I talk about this in a video and then it passes. You come and watch the other video and I didn't explain this here, okay? I didn't explain this there, okay? So if you actually look at page 3 of your playbook, I gave you a lot, guys. I gave you a lot. Okay, which page is it? Yes, it's page 3. If you look at it here, we have 3 types of trends. We have creeping trend, explosive trend, and normal trends. And under this we have more than 6 trends, okay? Under this we have 2 trends, and even after in this one we have more than 6 trends. So there are many trends that, if you know, they don't happen always, but when they do, that's when you can get roughly 1:10, okay? That's when you can get very, very big moves, okay? Like yesterday, if I go to yesterday's charts, I'm not going to talk about yesterday, but if I just go to yesterday's charts, if you look at S&P and the NAS, that's where we had an explosive trend, 1, 2, okay? Which is actually identifiable through 2 trend lines and different levels. As you can see, 1 touch, 2 touch, 3 touch, and then even here 1 touch, 2 touch, 3 touch, and 4 touches. So these are different trend lines at different levels. As you can see, even if you try to pull this one, it's not gonna make sense, okay? So you don't want to counter trend this kind of a trend, okay? And guys, I did say that a long time ago in your playbook, just make sure these things don't happen every time, but when they do, I mean the trends, when they do, they're gonna put you way too far, okay? Way too far. Because if you go to page 9, that's where I explained this kind of trends. You see, explosive trend, and exactly yesterday we got this one. So guys, this thing was written last year, so you can see when these things happen, you don't want to counter trend this, because it explodes. Exactly what happened yesterday, okay? Exactly what happened yesterday. And I also say this more than 3 times here. It is crucial not to trade against an explosive trade, as it could cause big losses. I explained this, okay? So these are the trends. Please just make sure you understand them, okay? I know that most of you have already mastered them. Just make sure you keep revising. Please guys, make sure every month at least you go and reread this entire playbook. Make sure you still understand everything, because I'm also updating it continuously. I will post the updated versions, okay? So guys, look at that. Okay, we spoke about the different kind of trends, okay? I believe you understand that as well, because they are important. When they show up, they're gonna give huge opportunities, even though they don't show up all the time, okay? So guys, we're gonna go back to where we were. Okay? Which was page 34, okay? Because I want to go to the charts. So I believe you understand all this. So we're going to be using this tick box to actually identify the beautiful trades that happen, because I wanted to make things as easy as possible. So whenever you see a pattern, you write it here. Is the pattern perfect? You write it here. Pattern time, you write it here. Evidence can't, you write it here. And this is the final decider, okay? This is the final decider. If the time is not correct, please don't execute, okay? So guys, I believe you understand all these things. Now we're going to go to the charts, okay? So when we are on the charts, we are looking at today actually. Okay, today I would want us to look at okay, I want us to look at this one. As you can see, some days you won't be able to identify a trap. Why? Because they just explode. They exploded and prices opened in the middle. So I always say when prices open in the middle like this, you don't know it's trap, because this, who's losing at this case? The people who went down, down, down are losing. The people who went up, up, up are losing. Remember, the people who don't have stop losses, okay? So you don't know who is trapped. And I said what? You can continue even though you don't know. So the next step is to wait for the session to open, okay? And as we are waiting for the session to open, today we had news 15 minutes after the session has opened, okay? So where does the session open? Okay, I'm going to use this. Oh, no, no, no. It's okay because this is MT4. Other way, this highlighted shows the session open, okay? And we had news roughly 15 minutes, okay, 15 minutes, which was 45 we had news, 45 we had news, okay. So the news were somewhere around here, okay. US news were somewhere, okay, let me just put it again. We want to see the news. Where were the news? Okay, they were at 45. Okay, this is the news candle, as you can see. So you don't want to be standing in front of the news, okay? You want the news to actually do its job, okay? So now the news are done, we have to go to the next step. Okay, fine. What is our first step? Our first step was to identify trade volume. We were unable to identify that because prices opened in the middle and they just started trending, okay? They didn't do as I outlined here. They didn't play or send people on this closing price, because most of the days they are gonna do that, okay? Today they didn't do that, and I just said some days you won't be able to identify that. We waited for the session. Today we had news, so we had to wait 15 minutes more because they were news, okay? Now we are on step 3, okay? We are on step 3, and from step 3, this is where we're gonna start filling this book here, okay? So okay, now we need a pattern, okay? And I told you, when they're building a pattern, they're gonna be sneaky. You're not gonna know what's happening until it's done, okay? Until a pattern is available. So your job is just to wait until you can see a chart pattern, okay? So this was S&P, okay? For me, okay, this is the chart pattern I saw, okay? This is a chart pattern I saw, okay? As you can see, I took it from here. I need more touches. So we have a touch here, we have a touch here, we have a touch here. I need touches on the bodies. I don't use wicks that much, but sometimes, of course, there are some touches which will be on the wick. But for me, I consider most of them that are actually at on the bodies, okay? So this was a wedge, okay? This was a wedge. You can see this is a wedge. It's not a triangle, okay? It's not a triangle, it's a wedge. You can see this one is up, this one, okay? You can see this one was perfect as a wedge, okay? It's a wedge. Okay, now we have a chart pattern, okay? Now we have what? A chart pattern. We have what? A chart pattern, okay? We have a chart pattern. Let me just put this one on the bodies here, okay? We want to put this ones on the bodies so that it becomes better, okay? So that it becomes better. Okay, good. Okay, good. Now this is what we have. We go to the next step, right? What is the next step? Do you have a pattern? Yes, we have a wedge, okay? We have a wedge, okay? The pattern we have is a wedge. Is it perfect? For the pattern to be perfect, I want it to have 3 touches up, 3 touches down, of course, with an exemption when it comes to head and shoulders, because head and shoulders by nature are perfect, okay? So we need to see if there's 3 touches up or 3 touches down. Not all, 3 touches up and 3 touches down. Okay, we will take the first touch here, okay? And we will take the second touch down, the first touch down here, second touch here, okay? Remember, we are looking for 3 touches, and even if the breakout is the 3rd touch, it's still okay, all right? So we have 3 touches on at the top already, and down here the 3rd touch is the breakout. Okay, good, okay? They broke out, okay? They broke out. Okay, good. Okay, good. Now we go to the next step. Is the pattern perfect? Yes. How much time did the pattern take? Okay, this is very important for me, okay? Because it helps me. If the pattern takes more than an hour, you can target 100, okay? Remember, I told you market condition will tell you, okay? If the pattern takes more than an hour, you can target 100, okay? So this one took 140 minutes, which is beyond 60 minutes, okay? What does this tell us? This tells us that we can, it's more than 1 hour. So this tells us that we can target 100 points, right? This is 100 points, right? Yes. Okay, and this is S&P. S&P is double volatile as compared to the NAS. So usually on S&P I will target 100. Okay, I will target, I mean, double the NAS. Okay, which is 200. Okay, fine. Now we go to the next step. Do we have an evidence candle? Do we have an evidence candle? Do we have an evidence candle? Okay, let's see now. Okay, I told you the pattern took more than an hour. On NAS or the Dow, I will target 100, but on S&P it's very volatile. It's double volatile than the others. So on this one I'll target 200. So we need to know if we have an evidence candle. What is an evidence candle again? An evidence candle is a big candle that breaks out. Okay, I will take you back here. It's the big candle that breaks out. Okay, it's the big candle that breaks out. Okay, so good. Let's go to see if we have an evidence candle. Okay, do we have an evidence candle? Okay, oh, they played. They didn't really give an evidence candle. Okay, why? Because it's the big candle, and usually the big from the last touch. And as you can see here, we have this candle which is big, and this candle here is not big as compared to this one. What did I say? It must be bigger than the last touch, unless they come and make another touch down here, then that one will be the last push down. So in this case here, this candle is not bigger than what? It's not bigger than this candle here. Okay, it's still doubtful at this point here. The only candle that makes sense is this candle here. Okay, and this candle now is way too far. Remember we said we have maximum stops of how many? Of 25. Okay, look, this is already 60. This could be the entire move already. So this one didn't give us an evidence candle. Okay, it didn't give us an evidence candle. Okay, and beside, if you say this is an evidence candle, it's not. And by the way, the time was still way too wrong. Even if this one was an evidence candle, it's still too wrong. But in this case, it's not, because it's already too far. Had this one been the one that breaks out, it was going to be an evidence candle. Or had we gotten a candle like this one, or exactly this candle here at the correct time, it was going to be an evidence candle. So literally this one failed. Why? Because we didn't have an evidence candle on S&P. Okay, so this one failed. Okay, because everything, it failed here. We didn't have an evidence candle. Okay, and by the way, even if we did, the timing was still perfect. So these two were not met. Okay, these two were not met, right? So this one failed. Okay, but it hasn't completely failed. Okay, it hasn't completely failed. Why? Okay, sorry, it hasn't completely failed. Okay, why? See, okay, it hasn't completely failed. Why? Because they can still give a retest. Oh, that's beautiful. They can still give a retest. However, this one failed. Why? Because our criteria were not met. So in this case, we have only one option. They could give a retest, or they can go and give another breakout on the other end. Okay, so we wait. Okay, so as we wait, what do? They give a retest, and from the retest, what happens? Oh, this is a beautiful one I took today. Okay, they gave a retest. Okay, they gave a retest. Okay, this is something we are anticipating. You know, guys, I even told you this on your playbook, that there are three possibilities and you must make a decision. The safest one is the retest. Okay, because when they break out with or without an evidence candle, they are either gonna go straight, or they are gonna do what? They are gonna break out, go and retest, or else they're gonna go break out and give a fake breakout. One of the three is gonna happen. The safest one is the retest, but it doesn't happen all the time. Okay, so look at what happened. They gave a retest. Okay, I was expecting this anyway, because you know, when they break out, okay, it had failed, but not completely failed, because there was still a possibility for what? For a retest. So this is the one I took here. Okay, again, we go back. Okay, but in this case, the evidence candle rule doesn't apply. We just need to make sure this is a big candle. Okay, the retest candle is at least a big candle, which actually is not doubtful. So in this case, they retested. Okay, but we look at the time again. Let's look at the time. The time was 2 pause, and when 2 pause is where? 2 pause is now 2 pause is now within the golden times, because 2 pause is here. It's actually before 5 pause, which falls in our golden times. So the timing was perfect. Okay, the timing was perfect. And now, because it's a retest, yes, originally I'll target 200, but now the conditions have changed. Everything is now different. Okay, so there are two options. you can target the low in this case. This is the point which is going to be hit, okay? Or you can simply target 100 because the pattern took more, okay? But in this case, I'm not going to risk targeting 200, okay? So of course on this one I targeted 100 and it went 100, okay? 100 plus, okay? But you can target the low in this case because the conditions have changed, okay? The conditions have changed. So they gave a beautiful one, beautiful one today, okay? This one met all our criteria, okay? Yes, we couldn't see trap volume, but this one was so perfect and it met all our criteria. And guys, I believe you can see, you're not gonna say why didn't I take this one here? No evidence candle. The timings were still very bad. Look at the time, guys. The time was 15:47, so it doesn't matter. Even if this candle was here as a breakout, the time was very wrong, because when you look at our timings, what did we say? We are not going to take it anywhere here. We take it within these colored areas, okay? This is just trying to keep our rules as strict as we can, because you know when you have strict rules, it works for you, okay? And there was no trend, of course, today, okay? There was no trend today. Okay, now let's go to another one, okay? This is the one I took. Okay, of course, if you don't see trap volume on S&P and NAS are highly correlated, so they're gonna do the same thing, okay? So if you don't see trap volume there, you are more likely not gonna see trap volume on the other one. So let's look at what pattern they gave us. For this one, at least, if you look at it, they gave us something like a triangle, okay? Okay, S&P gave us a wedge, but this one gives us a triangle. You can see for yourself. Don't say, you can see this touches here, this one is lower, this one is here. Even if you put a line, like if you're going to put a line here, you can see this pattern doesn't make sense anymore, okay? Because here's the touchdown. So don't say I'm taking patterns that favor me. No, these are the patterns they gave, okay? These are the patterns they gave, okay? So look at this. Let's go to the NAS again. When you look at the NAS, we couldn't get trap volume, and I told you don't get into the first candle. It's gonna be a stop hunt. But today we had news, so we had to wait 15 minutes to okay, this is the news candle, obviously. Where was the news? Okay, the news candle is this one that went up and came down. So the news were here. We are doing nothing until the news have actually completed. So as we were waiting, they gave a triangle, okay? They gave a triangle, and then immediately they, okay, do we have a pattern? Let's go back to feel that, because I want you to get used to this, okay? I want you to get used to this, okay? I want you to get used to this. So you can see, guys, I'm not choosing things that favor me. It's things that are there already. And I don't want to make this video way too long, guys. But anyway, I just want to provide value. So here we got a triangle, okay? It's a triangle. It's a right angle triangle, by the way. Was it perfect? For it to be perfect, we're not just gonna guess. We're gonna go back and count the candles. It's 139 candles, 1 minute time frame. So obviously this is more than 2 hours, okay? Because 2 hours is 60 plus 60 is 120. So this one is roughly 139. Wait. Okay, I jumped. This is 139. So this is obviously above 1 hour. So if I target 100 on this one, okay? Yes. So is the pattern perfect? We spoke about this. We need at least 3 touches down and 3 touches up. So we're not gonna guess. We're gonna go back to see. Okay, we can see this is the first touch down, right? Okay, I'll just use this one. It's okay. First touch up, okay. Second touch down, okay. Second touch up, okay. Third touch down, we met all the criteria. Up, we met all the criteria. So is the pattern perfect? Oh yes, boy, it is perfect, okay? The time we have already done that. Now we are coming to the evidence candle, okay? Do we have an evidence candle? Do we have an evidence? Oh yes, we do. We have a big candle. This is the biggest candle as compared to all these other candles, right? The biggest candles as compared to all these other candles. We have an evidence candle. Boom. But okay, we are not yet done. Yes, we have it. Okay, let's look at the time now. Okay, let's look at the time to see if it gives us a go ahead or it doesn't give us a go ahead. So when you look at the evidence time, it's 47. Is it, do we have a go ahead or not? Okay, let's go back and see. Where is 47? 47, is it within our timings? No. So guys, if you say I'm taking things that are favoring me, it's up to you. Okay, this is like no, the time was so wrong. So what happened? Do we have a go ahead? Oh, this is 47. This is the final decider, remember. Okay, so it said no. What did it say? It said no. It said no. Okay, so when it said no, this one failed. Okay, this is actually telling you they are not planning to do anything better, they are planning something. Okay, I always say this: why do you get caught in bad ones? Because you don't follow all the process, you don't follow all the steps. Most of you only care about, oh, the pattern. You ignore the trend. If you ignore the trend yesterday, you saw yesterday could have blown your account actually, if you have ignored the trend. And now if you ignore the timings, obviously you fell for this. Oh, let me get this, I'm gonna, oh, unfortunately, wrong time. Okay, wrong time. Sometimes it will work for you, but guys, you need something which has high probability. It's not about working sometimes, it's something that should work over and over again. If out of 10 times it works 8 times, if out of 10 times it works 7 times, at least you can build something from that. But if out of 10 times it works 2 times, you're not going to be able to build something reliable on that. Hence why we follow the proper times. Okay, so this one failed. The only option we have is what? To wait for a retest. It goes all the way back to get those who jumped into it. Oh yes, they jumped into it because the conditions were not met. It closes everybody, and then they give a retest. I told you, when it comes to a retest, we just need a candle that meets our okay, the criteria, we no longer follow them because this is something different now. We need a candle that is like reduces the doubts. So this is an engulfing candle. How many candles did they engulf? Many. 1 2 3 4. Oh, 4 candles. So this is like something that, yes, is it makes sense a lot. So as I told you, you can target 100 or the low, but the safest one obviously is the low, because they are gonna hit the low if they retest. That's the safest target. Okay, so yes, they did retest and they went straight to the low. Unfortunately here they didn't give 100, they only gave 50. Okay, and 50 is our minimum target, of course, but the target was the pattern was too big. We target 100, but obviously when now they failed here, when they failed, broke out and failed, it changes everything. Okay, so this one didn't deliver, it only delivered 50. And as I said, S&P is double volatile as compared to this one. S&P did go at least 100. Okay, so this is something you have to know. Okay, so we are done with this one. Let's go to the last one. I don't want to make this video too long, but anyway, anyhow, yes. Okay, this one, at least when we talk about trap volume, this one did give us trap volume. Okay, you can see this one played on the closing price. Okay guys, these things are there every day. Okay, they are there every day. It's just that unfortunately, if you don't give yourself enough time to understand this, you are not gonna understand this. People mistake the simplicity of this strategy as like, oh, we can like not back test, we cannot put in the work, we can just execute it, wait for the pattern during the session, and that's all. That's not all. The things you ignore are gonna punish you. Okay, I gave you everything. I gave you everything you need is here, and you have this. You have this. Just make sure every month you go through it. It's just so short, guys. It's 53 pages. I try to be as straightforward as I can. Okay, straightforward as I can. Okay, but now because I'm updating it, I'm gonna add more pages to it. Okay, but guys, you have everything you need. Okay, everything you need, and you're gonna get the updated one. Okay, because if you have this one, it's a lifetime. It doesn't matter when I update it. Even if I update it after 10 years, you're still gonna get it. Okay, just like what happened to the first one. So guys, just make sure you master and understand all these things. Okay, make sure you master and understand them. Make sure you understand them. Make sure you understand them, because if you're gonna ignore some of the pieces here, some days they are gonna punish you. Okay, they gave an opportunity away from trap volume, which is completely good, but there are days they'll break out to the top. And when they break out to the top, you go in. They give a fake breakout and go down. Why? Because you ignored trap volume. So today we had trap volume on S&P, as you can on the Dow. Okay, as you can see. And by the way, guys, you know that I have a one-on-one that I paused because I don't need many people. Actually, I don't need more than 5 people, because I really want to focus and give all my attention to the people in it. Right now, yes, of course, I've got 2 openings only 2 openings, only 2. So there are many people who have sent me like emails requesting it. Okay, I have only 2 openings. It's for 3 months, but if you haven't understood, I will go at least up to 6 months. Okay, at least up to 6 months. So I'm not gonna take up until that period. Okay, I only have 2 openings for a one-on-one, and the link is in the description. So guys, don't join it, please, if you are not willing to put in the work. I want somebody who's gonna start with a small account and be willing to take the smallest lot size. Why? Because I don't want somebody who needs, like, you need to get rich quick. No, this is not a get rich quick. It's not a sprint, it's a marathon. I want somebody who maybe is willing to start. Maybe if it's a pro firm, you start with $10,000 or $5,000. I don't need somebody who's gonna say, I'm starting with $100,000. I need a payout at the end of the month. I want somebody who's willing to master, somebody who's willing to put in the work. At least, guys, for the duration of this, I want you to master, get comfortable with it, without being too emotional about it. Okay, I need somebody who's gonna put in the work. So if you know you're not gonna do that, please don't be part of it. Okay, don't be part of it. I only have 2 openings, and don't take space for those who want to be part of it and are willing to put in the work. Okay, don't, I beg of you. Okay, so guys, yes. Okay, now we have trap volume up here. Okay, everybody who went up is trapped. I told you, if they use the entire day to trap, they have orders in their hands. They might send you back into trap volume. If you fall for the move back into trap volume, most of the time you're gonna get trapped, and they're gonna go in the opposite direction, and they're gonna do damage to you. Okay, so be patient. Okay, so guys, okay, as in this book, I love this example. It resembles exactly what we spoke about. Trap volume. Okay, trap, and then they turn down. Okay. Remember, I drew this last year. Okay, I drew this last year. Okay, so you can't come and tell me that I saw this, it happened, and no, these things happen almost every time. So this is a perfect template for the day. Okay, so let's go to it. I love this, guys. It happens over and over again. Same thing that is in the playbook, page 33. Same thing. I told you, master this thing. The problem is, people, you are following a lot of strategy. You are learning this one, learning this one. I told you, if you want to be consistent, you must master one setup and understand it as you understand your mobile device. Hence, I'm saying, if you want to be part of one-on-one, you must be willing to master, learn. Okay, that's the most important thing. You have this thing on your playbook, page 33. Most of you have this playbook already. You have this. So today, it's just a template playing out exactly as you have it. Okay, you have this template, guys. You have this template. Just look. Okay, trap volume up. We wait for the session. We had news. Okay, we're gonna wait for the news to play out. They came at 45. Okay, this is the news. This is the news candle. Okay, good. This is the news. We wait for the news to actually play out. So we are doing nothing up until the news have played out. And what do we want to see? We want to see a chart pattern. We want to see what? We want to see a chart pattern. Okay, we want to see a chart pattern. Okay. And this was a perfect chart pattern, guys. This was a perfect chart pattern. Okay, yes. It was a perfect chart pattern. Okay, it was a perfect chart pattern. Okay, even if you put a rectangle. Okay, even if you put a rectangle, it was still a perfect one. Okay, let's see if it was perfect. Let's go back to our tick box. I'm taking more time now, and this video is getting crazily long. Okay, crazily long. Okay, guys, we're gonna start here. Do we see a pattern? Yes, we see a pattern. It's a triangle. Is it perfect? Let's go back. This was a beautiful trade. Okay, beautiful. Okay, let me just put it up to here. Okay, if you can see, I took the body, I took the wick, and again I took the body. So you can just see. Okay, fine, guys. Okay, fine. Let's see what happens. Okay, is it perfect? Okay, we almost have a touch up here. We have a touch down here. This is one. We go up. Yes, this went all the way up. Okay, this went all the way up. So we will count it. Okay, I told you, if it goes surpasses halfway, if it surpasses halfway from here, it actually gave all like it went up. They sent people up. There are people who chase this move up. Okay, so yes, it is a touch. Okay, because sometimes they're not going to give you things the way you want them. You just have to know how to judge. We get another touch down, we get another touch up, and then we get another touch down, and then it goes all the way back up. Yes, it went beyond halfway with a week. You see, there are people who chase this, but again, we already have 3. Okay, and that's when this one went up again. So we want to see if we have an evidence candle. Okay, we want to see if we have an evidence candle. So yes, our pattern is perfect. Okay, what time did it take to build the pattern? Okay, it took more than an hour. Okay, all of these patterns today took more than an hour. 1:30. Okay, it took more than an hour. So the target is 100. Do we have an evidence candle? That's what we want to see. That's what we want to see. Okay, so this is the last touch here. Okay, and the breakout candle was this one. Okay, of course, this candle is not we still have these candles here. So this candle is not like completely a good candle. Okay, it's not a completely a good candle. So this is not the evidence candle, but they gave a bigger candle here. Okay, they gave a bigger candle here. Okay, so yes, the evidence candle, okay, let's say it wasn't like convincing because we had big candles here, but this one was more convincing for me. Okay, this one was convincing for me. But if you doubted it, it's still okay, because it went up and retested and gave a beautiful candle here. So this one was a big candle already, because this move is already in motion, and this is a candle which shows they are going down. Okay, and mind you, okay, let's go back. Mind you, where are we? Okay, where are we? Oh, okay, okay, yes, we are here. Okay, we are here. Okay, you can see they gave this doji candle which went up and failed, and then it was followed by what? An engulfing candle. Okay, so this is enough for me to enter. And then again, if you still doubted, they retested. I told you, when they pull back, don't see this as a threat, see this as an opportunity. They pulled back and gave a beautiful candle again. So this is enough for 2 entries. Okay, 2 entries. And I told you the pattern was what? So yes, we got an evidence candle. Okay, if you doubted it, there is a retest. Okay, for me it was good, but the first one for me was not an evidence candle. This is not an evidence candle. Okay, this is not an evidence candle, because we have super big candles. This was a big candle. Okay, this was a big candle. The size is almost the same as this one, so this is a big candle. Okay, this is a big candle, and again they retested. And I told you, your stops are 25. If you don't have a crazy, that's why. If you don't have a crazy, this is roughly 24. So 25 was a little bit up. So if you don't have a crazy broker, obviously they didn't take you out. Okay, obviously they didn't take you out. Okay, but if you have a crazy broker with crazy spreads, obviously they took you out. Okay, but again, even if they took you out, I always say sometimes you get into a good one and they retest, but it's still valid. You can still get in again. I do that all the time. I've showed you a lot of times where they closed me with a retest and they went down again. But this one, at least you did have your 25 pips. Okay, from the close of this candle. Okay, you did have roughly, this is 23 pips, so you still had 25 somewhere above here. So of course, if you don't have crazy spreads, they didn't close you. Okay, but if they did, this is still valid, and the pattern took more than 1 hour. What does that mean? That means 100. Okay, that means 100, and let's go, it went to 100. Okay, yes, it went to 90, and then it came to scare people. Okay, but you already know that is going to happen most of the time, and that's when they broke down to 100. So guys, these things are always there. These things are always there. These things are always there. These things are always there, day in, day out. Just please master this. Just master this. Okay, just master this. Okay, just master this. Okay, master everything that is here. Okay, master everything that is here, guys. Please make sure you master. I've been sharing the same thing over and over again, so you can't say this is like a coincidence. I share videos almost every day. This week I've been sharing videos from Monday every single day, and this has been happening every single day. So guys, it's up to you. Just make sure you master this every month. Make sure you revisit it and reread it, and make sure you understand it. Okay, because guys, it's the same things each and every day. Anyway guys, I appreciate you. This video took more than I expected, but Have a beautiful day. Tomorrow is still same thing, guys. Thank you.